Good morning. It is just after 8 UTC. Looking at Bitcoin in general. So after yesterday's massive news about the 50 basis point reduction, which is great, first time in 4 years. Yeah, market's moving. There's a lot of bullishness. All the FUD sentiment over the last couple of months seems to be kind of washing away. So we'll see what happens with that. So the big thing here, obviously, a bit of a surprise that they lowered it more than expected in general, which is good. I think they need to be aggressive with it. They were pricing in, I think, they were trying to price in 25, maybe a little bit higher, but that's good. Overall, in general, positive. Today, we've got initial jobless claims. These are definitely going to be a big factor, obviously. Existing home sales, interest rates. Yeah, okay. Well, it's relative, but this was the big event. So this is the number one thing that's looking positive. They're looking to continue to reduce rates, so at least another 60 basis points based off of what Powell said yesterday by the end of the year. So overall, that's a good bullish high time frame. They might even try to make it faster, which is great too. Next week, looking at some of the bigger important economic data coming in, really starts hitting into Thursday. End of week next week is the last trading week of September and of Q3. So going into the end of next week is going to be big. So from now till then, lots of crazy stuff. We want to make sure we do nice closes. You know, Q3 traditionally has the lowest performing quarter just because it has September mostly. But at the end of the day, big data points also on Friday the 27th. Remember, all quarterly options unlock. So you're talking about massive free ups of liquidity in the market. So keep that in mind. Looking at long short ratios, looking strong. This is great. We're seeing actually a flip now where there's more shorts and longs. People, retail is basically broken. They're trying to short it to new lows as the price continues to move up. So this is, again, showing strength to have a continuation move to the upside. We saw that flush out. It's actually very nice when it actually starts trending to the upside. Very often you're seeing a pull back. When it starts trending hard to the downside, you're seeing continuation. So as people continue to try and smash the red button, that's fine. That's great. It's just providing more fuel for upside continuation. Looking at the funding rates in general, mostly bearish, obviously, because we've had really strong grabs of localized liquidity. We popped the 62K from that announcement yesterday, and in general, overall looking decent. With that being said, lots of green on the board for most of alts, which is nice to see. But again, funding rates, they're trying to build back some of the order books, so they're incentivizing market makers and liquidity providers to take those shorts. And as far as the heat map, really locally, a lot of people smashing the buttons as of the announcement yesterday. There's a decent amount that could get us back to like 60.8, 60.6. I really like maybe some retest of structure. If you have some localized breakdown, we're running flat into the open. Again, liquidity is still stacking the upside. We're getting close to potentially getting to 63.7. Like that's in the last 24 hours. It's getting very heated up. If we do have some localized failures that, we start sweeping that liquidity down potentially even to 60.7, we could be seeing a potential grab of the really deep stuff at 58, 58.7, stuff like that. But realistically, the lows that we put in from the other day, we don't want to start losing. It would just be bad in general. So for the time being, we still get some upside priority. It's looking a little bit nasty. Obviously, we have some really deep drives, but we are still trending up, higher highs and higher lows on the 4-hour plus. So looking strong. Liquidity is good, taking us even here higher time frame, potentially all the way up to the lows from the structure from the end of August. So 63.5 starting to look pretty attractive. That being said, for us to really sweep anything of higher time frame importance, we have to go back to 57K. If we sweep that real quick and then close back above, it's just a liquidity graph for continuation. I like the fact that we're trending up. I like the fact that retail's trying to short this. It looks overall positive for this like kind of upside continuation. Looking over at trading light, just look at resting orders again. We're seeing quite a bit of longs or shorts, locally trying to step in to hold the price down. The market's not exactly carrying at this point, so I would say you've got upside priority is likely the scenario until you start losing like 59, the lows that you just put in from yesterday afternoon. Looking over at the footprint, just to look at general orders and stuff like that. Tons and tons and tons and tons of local liquidity in shorts and longs from the last candle. Everyone was smashing buttons here. We don't really start running the risk of really liquidating all these major longs until we start losing like 60.5. So this is where the big cluster is. I mean, you're talking about like 10K within, at 60.5 to about 60.4, 10, 11, 12K of positions, right? These are action long positions. There was some punishment. Obviously, some of these guys got flushed out, some not, depending on the time frame. But in general, it looks good. All the guys from the candles after that have been getting a free ride for upside continuation. Tons of long liquidity. Good imbalances. Again, that could take us back to 60.7, 60.5. But overall, I'm pretty bullish about this structure. It looks good. If we have sweeps that come back to 59.5, you know, there are some major imbalances below that. The level we cannot lose at any point would be, you know, 57.5, basically the lows we put in at the 16th. We don't want to lose this either. You know, the stuff at 59, call it 59.5, closing under that on the 4 hour. It starts to look rough. But, you know, overall, we've had some strong upside movements. People are waiting to try and pull back for continuation, as locally people are trying to short this back down, thinking they're going to break everything. Right now, you're in, you know, the after hours of the biggest news event in economics as far as interest rate decisions in 4 years. So it's still playing out. If you want to try to short some local failures, look for actual local failures. Right now, we're literally just running flat. Finally, looking over at Trading View for a general direction. So yeah, we're looking at continuation. So all this stuff is looking positive. Any bullish backtest, like a really local one, we could lose the daily open, but if we, you know, do a really strong bullish backtest at 61.4, all of these major high time frame levels, you're just looking for continuation. If we start to lose stuff, once we start failing underneath those tests, under 61.3, under 61.5, that starts to break stuff to like come back down and retest. Losing 59K basically is losing that upside trend, losing these lows at 59.5. Obviously, that's in the same box of where we want to see holds, and the general upside trend must hold at 57.5. So that lows we put in on Tuesday are kind of like the big thing here for continuation. But overall, it's going up. Basically, what's happening here is that we're having really strong upside movements. As the movements kind of like peak out, a lot of people are trying to breakout trade it, and a lot of bots are trying to breakout trade it, and they get punished really quickly with a strong retracement. And that's been occurring over and over again in this overall structure. So for right now, still looking uppish, tentatively less so. If we start breaking 61.5, we want to make sure we do higher lows. If we start making lower lows, that breaks the upside structure. But for right now, number one key levels for gaining above a 62.7K. That's a Q3 open. If we regain this, especially since we're getting towards the end of the month, it would close Q3 bullish, which would be absolutely astounding and great. 61.5, like I said, that's the big confluence level and the key to the test of you know, the August up at like 63K, 62.7, that type of stuff. Yeah, I think the big thing here also is that the low you want to see hold is holding 59K. We don't really want to get below the weekly open September. We've tested it already. We don't need to go back and do it. I just don't want to clear those lows. It just starts to break structure a bit. But in general, it's still looking upside continuation. If you get some localized failures, go for it. We got some nice power scalps from the weekend, and then also that move up on Tuesday, just really quick, aggressive to move back down. But the general direction's still up and long. Yeah, and the low that must hold at all costs, 57.5K. As long as that holds, you're looking for upside continuation. Play the local levels. Don't get overly greedy. There's a lot of liquidity coming into the market. There's a lot of short liquidity that's stacking above. Don't discount that. Don't expect that it's going to come back and give you an entry. It might just hold very locally for continuation moves. Again, play it level to level. Low time frame if you're scalping. Until then, longs are safe until proven otherwise. That's it. Peace out.